What if I told you that most people trading Forex are doing it completely wrong? They watch random indicators, follow social media gurus, and chase signals that promise quick profits. But behind the scenes, professional traders use a completely different approach. And here's the surprising part. It's not about complicated indicators, it's not about predicting the market perfectly, and it's definitely not about trading every day. In fact, the real secret that professional traders use is something most beginners ignore. Today we're going to reveal the strategy many profitable Forex traders rely on, the secret that helps them protect their capital and grow their accounts consistently. You'll start looking at the Forex market in a completely different way. Let's start with the biggest lie in Forex trading. Most people think successful traders win most of their trades, but that's actually false. Many professional traders only win 40% to 50% of their trades. Yes, you heard that right. They lose almost half the time. So how do they still make money? Because they understand something beginners ignore: risk management. Instead of trying to be right all the time, professional traders focus on protecting their money. They treat trading like a business. Every trade has a calculated risk, every position is carefully planned, and most importantly, they never risk too much on a single trade. One of the biggest secrets used by professional Forex traders is something called the risk-to-reward ratio. This simply means that traders aim to make more money when they win than they lose when they fail. For example, imagine a trader risks $100 on a trade, but if the trade succeeds, they make $300. That's a 1-to-3 risk-to-reward ratio. Now here's where it becomes powerful. Even if the trader only wins 4 out of 10 trades, they can still make money. One of the biggest secrets used by professional Forex traders is something called the risk-to-reward ratio. This simply means that traders aim to make more money when they win than they lose when they fail. For example, imagine a trader risks $100 on a trade, but if the trade succeeds, they make $300. That's a 1-to-3 risk-to-reward ratio. Now here's where it becomes powerful. Even if the trader only wins 4 out of 10 trades, they can still make money. Now let's talk about why most traders fail. The truth is, Forex trading is not about intelligence, it's about discipline. Most beginners make 3 major mistakes. The first mistake is overtrading. They believe the more trades they place, the more money they will make. But professional traders often take only 1 or 2 high-quality trades per day, sometimes even per week. The second mistake is revenge trading. When beginners lose money, they immediately try to win it back. They open bigger trades, take bigger risks, and often lose even more. Professional traders do the opposite. When they lose, they step away from the market. They stay calm and wait for the next opportunity. The third mistake is trading without a plan. Many people open trades based on emotions or random signals. But professional traders follow a strict trading system. Every trade has an entry point, a stop loss, a profit target. Nothing is random. Everything is planned. Another secret professional traders rarely talk about is patience. The market moves every second. Think of trading like fishing. You don't jump into the water and grab fish with your hands. Instead, you wait for the right moment. The same is true in Forex. Professional traders wait for high-probability setups. Sometimes they watch the market for hours without placing a single trade. But when the right opportunity appears, they act with confidence. One approach many successful traders use is called trend trading. Instead of trying to predict reversals, they follow the market trend. The idea is simple. If the market is going up, they look for buying opportunities. If the market is going down, they look for selling opportunities. Why does this work? Because trends can last much longer than most people expect. Large financial institutions and hedge funds move massive amounts of money. And when they push the market in one direction, the trend can continue for days or even weeks. Professional traders simply ride that momentum. They enter the market with the trend and exit when the trend weakens. The final secret isn't a strategy, it's mindset. Successful traders don't treat Forex like gambling. They treat it like a long-term investment. They know they won't become rich overnight. Instead, they focus on consistent growth. Even making 1% or 2% per week can turn a small account into something powerful over time. Because trading success is not about one big trade. It's about hundreds of small, smart decisions. So the secret Forex traders are using isn't really a secret at all. It's discipline, it's patience, and it's risk management. The traders making millions are not gambling. They are following simple rules that protect their capital and maximize their profits. And once you understand this approach, you'll realize something important. Success in trading isn't about predicting the market. It's about managing risk and staying consistent.